joining this, which is now the third of our series of webinars that we have been organizing in the last couple of weeks. Today's session deals with an area that unfortunately is a problem that most businesses, not only locally but also globally, are facing, and that is the managing cash flow pressures. What we're trying to do, we have no magic wand or magic solutions, and we're not promising to give any of that. But what we've tried to do is come up with some insights based on our experience, and maybe put together a bit of a framework in order to assist you all through the process, through these difficult and unprecedented times. Before we get going, as you can see on the slides, just some housekeeping rules. This is a new experience for us all, so it's the first time that the people on this call are carrying out a webinar. So we need your cooperation. So the rules are, and to make it easier for everyone, let us try and keep all our the devices both on mute and also with the camera off. That should help. Obviously, the speakers, when we come to the questions, the devices speakers you need to make sure that those are turned on. But I think the most important rule is that we keep both the mic on mute and the camera on, and the camera off. Okay. The plan for today's session is that we've allocated an hour and a half for the session. We've prepared some material which we'll be taking you through, but we'd like to leave at least 45 minutes for questions, and we'd like to take your questions. Our plan is to take questions. There is on the top right hand side, you're looking at the comment section of the Hangouts setup. Put your questions as we go along through into the comment section. There's a team in the background that is compiling the questions, and then at the end of the session, when we cover our material, we'll be going through all the questions. Obviously, we'll try and cover as many questions as possible. If there are things that that cannot be covered in this session, we'll reach out individually to the people asking the questions, and we can take any discussions also offline. So just on the next slide, please. A brief introduction of the people who will be listening to today. There's myself. For those of you who do not know me, I'm Ryan Shibaras. I'm a partner in our advisory service line of service. The other members are mainly people from our advisory line of service, but we also have someone from our legal team. So there's Bonaven Gauci, who's also a partner in advisory services. Angelique Spina and Mark Tabona, who are both senior managers in advisory. There's Ruth Vella, who's a lawyer and part of our tax and legal line of service, and there's Katya, who is also part of the advisory team. And before I hand over to them, I'd just like to take you through the agenda for today's session. We've tried to keep it on as much as possible on the practical side. Initially, Bonaventure will be taking us through a bit of the context in which we are, something we're all familiar with, the unprecedented times we're living in, but a bit of setting the scene of what we are facing. Then Angelique will take us through what we think is the first step, and something that by now I'm sure a lot of you who are in the finance function would have a process that would have already been carried out, which is taking stock, rapidly understanding your financial position. That will be the first step in any process. Mark will then move on and try and come up with different actions that you could take to protect your position and manage your cash more efficiently. The next part of the presentation, Katja will take us through a bit of tips. Obviously, you'll be in this period, there are a number of stakeholders that you will be dealing with, and we have a couple of tips on how to deal with these both internal and external stakeholders. And in the concluding part, we go a bit on the legal side. That's why Ruth is also on the call, looking at what are the director's obligations vis-a-vis insolvency. Obviously, these are very delicate. This is a very delicate situation. There are responsibilities that I'm sure that I think are important that we are all aware of, and important that we are aware of, rather, that and Ruth will spend some time going through those. Those are the 5 sections in which we plan to split the presentation. As I said in the beginning, we plan to allow time at the end of the session, at least 30-45 minutes, to take your questions, and I'll be moderating the questions, and they'll be answered by the team as we go along. So that is the plan. Pass on to Bonavent, who'll be starting off and covering setting the scene.
Thank you, Ryan, and welcome to this webinar again. We are now in April. We have just begun Q2 of this year. Typically by now, businesses would be geared up in the execution of their annual budget, with a view achieving targets and business objectives for the year. Well, but this year we had COVID-19 coming along. I mean, it started in China way back in January, and we have started seeing it slowly coming towards us until it hit Italy in February. Nevertheless, it still caught us, every one of us, at least in the business community, relatively unprepared. We thought that Malta will be spared, well, but we were not. The impact of COVID has, of course, been very wide-reaching. It has impacted every facet of the organization. First and foremost, COVID has impacted the workforce. Naturally, companies are trying to protect the well-being of their workforce, encouraging employees as much as possible to work from home. This is, however, not possible in all cases. Some businesses, in fact, had to effectively shut down, whilst others have suffered a severe disruption in operations and the reduced resilience in key functions, infrastructure, and services. As a result of all this, COVID has severely impacted the supply chain, resulting in the reduction or delay of output from certain companies operating in affected countries and disruption in transportation. We've also seen companies suffering severe delays. Some of them, were reduced basically to zero revenue, which of course has resulted in significant deterioration in cash flow. At least companies not involved in production of hygiene products or pharmaceutical products, or companies in the food retail business, which of course, are basically perhaps doing better than before now. On top of all this, whilst having to deal with all these issues, companies still need to abide by laws and regulations, some of which are changing to ensure that these are adapted to current circumstances.
Bonavent, sorry for interrupting. We're getting feedback that the volume is a bit low. Can you get closer to the mic?
Okay, apologies. My internet went off just immediately before, so I had to dial in from my phone. Apologies for this.
Okay.
Okay, moving on to the next slide. So, I mean, these are probably charts that I'm sure that you've seen basically in the past few days. Basically, the million-dollar question is, how long will the situation last? Will we manage to avoid a rapid rise in cases, basically, but suffer hotspots emerging from time to time? Or will we see an early peak followed by a decline, following sort of an increase in population, immunity levels increasing? On the other hand, the other scenario is a delayed peak. What I'm sure that by now all of us know is referred to as flattening the curve, which is, of course, the preferred approach by the health authorities to ensure that health services are not overwhelmed by the coronavirus. I mean, naturally, this means that it will take longer for us to return to normality. And for businesses, it means that businesses will continue to face an uncertain environment for a longer period of time. If we can go to the next slide. So over the past week, we held numerous discussions with clients, and we had to summarize the key challenges and common worries our clients are facing. First and foremost, the main worry is, of course, the impact on cash flow, particularly in the case of companies that have suffered an immediate decrease in sales. As a result, naturally, many companies are facing difficulties in forecasting and managing cash flows. I mean, if we don't know how long this situation will last, I mean, essentially, basically, it's difficult to identify or quantify the funding shortfall. I mean, for how long would certain companies need to sustain sort of such low levels of revenue? Given such tight cash flow situation, companies often have to prioritize suppliers. I mean, which suppliers basically to pay first, essentially. And often it's hard to identify who are the critical suppliers to enable the company to continue with sort of which are these critical suppliers to enable for a company to continue with its operational delivery. Naturally, I mean, companies are also having to face difficult conversations with struggling customers who may be facing the same liquidity issues. I mean, all businesses are essentially in the same boat. So essentially, most companies are struggling with their cash flow, and therefore that collection is, of course, becoming even more difficult. Naturally, in this whole environment, companies are also facing fragmented production schedules, which in turn have an impact on their production costs. It's difficult to assess demand and sort of adjust production schedules and purchasing according to these demands. Finally, I mean, all of this, the environment is also difficulty is also augmented by the fact that I mean, there are other stakeholders in play. I mean, that might basically cause an impact on liquidity on the company, and naturally, how the question is how to address these challenges. In this webinar, we present a three-step approach. It's no magic wand, as Ryan explained, but I mean, it's a three-step approach of how to approach and address these pressures. The first of these steps is, in fact, the taking stock of the business current financial position, which Angelique will now be delving into.
Okay. As a starting point here is the taking stock of the current situation. There are actions which must be taken in the immediate to protect the position of your organizations, and not only the employees, the suppliers, the customers, and importantly, the financial results. The challenges are varied and often very significant. I mean, we are seeing and we are listening to a number of companies They are bleeding at the moment. Some have seen losses of more than 50% in their revenues in just the first quarter. In this sort of environment, I think the first thing that we need to understand is what is critical. And what is critical, I think, are for survival, essentially. And there are 3 key points. Cash, digital, communication. I mean cash, needless to say. It's not only king at this point, but it is simply critical for survival. Digital. I mean, connectivity is essential now to allow the business to continue. Remote working, it's no longer, it's the norm now, it's not an exception. And the quick reacting quickly to this adversity is very dependent on strong digitalization. From our experience, you would be able to survive better if you embrace it quickly and early. Communication, I mean, our firm has experienced that as from the very beginning. Immediately, our communication has changed completely to Hangouts, to a different way of communicating, which we had before. But in the case of companies as well, there needs to be continuous communication with the colleagues, with investors, bankers, suppliers, customers, all the time. Given the uncertainty that we are living in, it is important, obviously, to retain transparency and the reality to communicate in time certain tough decisions which will need to be taken. Moving on to the next slide, from where do we start? And as a first step, and as Ryan mentioned earlier, hopefully most of you are already actively engaged in it at this point, is to take stock of your current latest position. In reality, they are divided into the key items related to the balance sheet. So you will need to be looking at your working capital position. We know supply chains have been disrupted, managing your creditors, analyzing and optimizing the current arrangements that there are in place with your suppliers. We also know that consumers are less likely now to make certain discretionary purchases. So rethink about your inventory levels. They must be monitored really closely in the light of the changes that we are experiencing in consumption patterns. Again, debtors, even the ones that perhaps have always paid on time are now potentially likely not to pay within the normal timeframes. The top priority for the CFOs and the finance function is to optimize cash reserves because the duration of this crisis is yet unknown. So far, our experience has been to help companies in the firefighting, meaning in trying to find ways of how to preserve cash, raise cash, and that is the key experience that we had so far. However, I think we also need to consider that there could be companies that have high levels of cash as of now. And this is clearly an opportunity to reconsider the capital allocation plans that are in place, to see certain projects that can be undertaken. In reality, in these circumstances, it could be a time for prayer. Looking at liabilities is another very key important aspect. Before immediately tapping into lines of credit, that is generally the reaction that we get with most clients, going for more credit, going for a loan, going for a higher overdraft. You need to analyze what that you have in place in your balance sheet. Look at the covenants that there are there, force majeure clauses. But you cannot look at the liabilities without also closely monitoring your assets and seeing what are your assets in place, looking at them with an aim really of identifying any potential, any surplus assets that at least for the next 6 months may not be that critical for your operation moving forward. You also need to identify which are perhaps the unencumbered assets. Certain assets at this point may provide an opportunity to raise capital, to either through the banks or perhaps setting up joint ventures, so that could be a way forward. The focus in analyzing the company's financial position, as I said before, is really to preserve cash, but really also to deploy it when and where it is really needed. What was perhaps before business as usual, that you maintain certain inventory levels, that you place orders at a certain point in time, that creditor payments are done after a certain number of days. No, now needs to be rethought. The CFO, more than ever, needs to be able to track in real time the effect of certain cash decisions that are taken in order to help the company tame down the downturn that we are experiencing. Now, apart from looking at the balance sheet, we cannot forget, obviously, the P&L, the cash generation of the company. In fact, at this point, one would need to be looking at the ability of the company to continue generating some form of cash, and therefore looking at the P&L from a cash flow point of view, asking pertinent questions that challenge the business as usual, drilling down to the operating cost structure and analyzing it into components. I mean, this is what we've been doing so far with companies, and some things which are perhaps it's very hard to challenge the obvious. Some people have a setup costs that have been there for quite a number of years, allowing them to manage their business successfully, but now they have to rethink. You know, it's the variable cost elements are perhaps the obvious ones that could be avoidable if certain lines of business are now being stalled. Same goes for perhaps the semi-variable costs, but I think it is also very critical to look at what you consider the fixed costs, which are I feel that they are the most difficult to challenge and to alter. They at this point, however, I think that the fixed costs also need to be reconsidered with a different mindset. You know, with much of the world in lockdown and demand falling, it is unlikely that the business will return to normality shortly. Therefore, understanding your cost structure is critical to pave the way for decisive decisions in terms of determining which costs to eliminate, you know, what flexibility to maintain, and also how to balance in reality the reductions in costs to allow the company to bounce back and scale back, hopefully when operations come back to some form of normality. Last, not least, you need to look at your resources, the human resource element, the manpower. Analyzing the workforce into components. It is a necessary evil, but it needs to be done. You need to look at your human resource element, understand who are the critical individuals, who are the critical members of your team that will have to run this forward. You also have to look at the manpower, the one by looking to try and see who perhaps have spare time. And there could also be an element of the manpower that has become really redundant, that they are no longer really productively employed. So existing shifts, overtime, working practices, hours, all this must be revisited. Knowing clearly your starting point is essential to think about the fixes that are needed, the transformations that are needed as of now, and also resource reallocation. Now, Mark will take us through some steps that companies could consider to help address this difficult situation and perhaps mitigate the current issues.
Yes, thanks, Ange. Good afternoon, everyone. So as Angelique said, you know, after getting a firm understanding of your position currently, it's very important to then go into action mode. One of the more important things is that you approach this with an open mind. One needs to be looking at possible means of support that would be coming, you know, like both externally, but the important thing is that before we dash to going external, to looking at what funding we might require, it's very, very important to get a clear picture of ways that you can improve and internally set up yourself better to conserve cash. I mean, I'll be touching on a few key points in this respect in terms of actions. Obviously, we appreciate that a lot of you probably have already touched on some of these. The reality is that there's no one size fits all solution that will work for everyone. But basically, there are some principal elements that are important not to miss out on. I mean, initially, and perhaps it's not the first thing that would come to mind. Angelique mentioned firefighting and whatnot, which we're seeing with our clients. It's very important to revisit and to reconsider updating your business plan. Obviously, the way you budgeted for the year and your expectations have practically for many businesses been trashed. So we need to be looking at ongoing projects, putting those on a hold or kind of deferring them. The importance of rationalizing on costs, which Angelique mentioned. There are elements of discretionary spend on our income statement, which probably on an ongoing basis are fine because our top line hasn't really been touched so much, but we need to look at these in more detail and more specifically, and basically in the context of the stated revenues and forecasts that we're facing at the moment. I mean, essentially, this might be a time, kind of the right moment to the right situation to review as well the way that we're doing things, that we have been operating, and consider kind of the reviewing our business as well, and seeing ways, like some examples, like the more typical ones that come to mind to anyone is like the closure of restaurants and a lot of the shift to deliveries and that kind of thing, which obviously if you're not set up for, then you'd need to kind of invest in as well. I mean, so there's a bit of a different scenario, as in, and that's what I meant by approaching it with a bit of a wide approach. Although the tendency is to kind of go into the thick of things and firefight. So as you're doing that, and this is something I appreciate you're going to be doing, in conjunction, a lot of these action points really. As you're looking at this business plan, I mean, cash flow forecasting becomes key, especially for those businesses that kind of in the first stage and taking stock of the position that you're in might be a little bit more tight. So your cash flow forecasting and the model that you build up, especially in the shorter term, is going to be very important at this point in time. Only, I mean, the most important thing is to look at where you are before you start going into any kind of forecasting as well, because you might rationally rush into a decision that then will leave you with you for a while. I mean, we're typically seeing, with certain clients with some tighter cash positions, looking at cash forecasting in the 12 to 13 weeks. I mean, we're saying, this is spring now, and we're saying we need to be seeing how we're going to get through this season, and hopefully, in the next 12, 13 weeks, return to a sense of normality. Although the reference to normality at the moment is not very clear to anyone. As you're setting up this model for your cash flow, I mean, it's very important for it to be a flexible model, especially in terms of updating this as we're going along. I mean, we need to be in a position that we're looking at where we stand on a regular basis. I mean, sometimes in certain cases it's even a on a daily basis, but let's say daily to weekly. I mean, it's vital, for us to do that and make sure that we're building the flexibility into our model. This as well is kind of presenting a little bit of an opportunity, if one wants to look at it in that way, in terms that, as in generally, and even with in general, when the going is fine, you might tend to kind of be a bit more lax. And as long as you have a certain element of cash flow and a good position, you kind of, yes, you will be you're doing your work and you need to control things. But at this point in time, obviously, everything has suddenly got to the forefront for everyone. So this might be an opportunity not only to take the right decisions in the shorter term, but as well, kind of building up the structures internally in order to help you in the longer term and going forward, which would definitely give you added benefits when you're back to kind of your normal working flows. I mean, the immediate thing obviously is like kind of cash conservation. I mean, the whole norm since we've been studying or whatever, the cash is king, and even when we're operating, cash is king, cash is important. I mean, the conservation of the cash is key, no matter what your position is. I mean, not everybody is in the same position, but it's very important because, especially in terms of the uncertainty that we face, nobody knows for how long, etc. It's important to conserve as much as we can. I mean, I highlight a few points over here in terms of potential examples. I mean, there'll be various and there'll be different ones across different industries. The reality is that the more we think about this, the more. I mean, whoever would have imagined, that's kind of one of my main points that I keep kind of repeating. We keep discussing, as in no financial model that we've ever worked on or cash flow model has ever kind of, possibly would never have imagined like fathomed the idea of such a drastic reduction in revenue all at one go, and this situation, So I mean, to a certain extent, for the ones that follow, I mean, Bill Gates kind of touched upon to the point that we're in terms of viruses and pandemics in 2015, but even whoever listened to that at that point could never have imagined this crazy scenario. So it's important to stop the bleeding now, as Angelique mentioned, as in possibly cancelling non-essential orders, requirements of certain part-time personnel. I'm sure there are points that you've already looked at. I mean, possibly shorter working hours, and delaying obviously the non-urgent payments. So that moves on to the next slide in terms of the importance of optimizing our working capital. I mean, more than ever now, it is the time for that. As in looking at, especially starting with collecting your debts, looking at maybe some older balances in terms of your receivables. Yet again, as I mentioned before, perhaps not as stringent in the past when the going is fine. We need to kind of be a bit more focused on this, and like at the same time, we obviously need to understand and empathize with. At the end of the day, we're all in the same market. We're dealing with clients and suppliers, with customers and suppliers. So ultimately, in this process, there's going to be an element of those relationships as well, which one needs to nurture. So like, whilst chasing receivables and delaying payments, it's going to be pretty much a balancing act in that sense. But I mean, we need to be stringent about it, because at the moment, we need to stop that bleeding and try to survive as much as possible. Another point that I mentioned, which kind of is there and was covered on previous webinars of PwC, which are on our website, in terms of the government financial relief measures and any initiatives that are being provided. The typical one is the wage supplements and the tax to the critical sectors, and then there are tax deferrals and potentially loan guarantees that are being provided, which could help in further future funding, additional funding. But I'm sure, I mean, there's the information on our website, and in this sense, in terms of the details with respect to these measures, perhaps you can reach out at some point as well with our tax team. after looking at the situation, taking stock and looking at certain measures that can help stop the bleeding, recalibrating our business plan, I mean, then usually part of that process is obviously looking at our existing lenders for the support that we might need at initially in these stages, especially connected as well to what the government is saying in terms of loan guarantees. But we need to reach out. We need to, see where we stand in terms of our loans and any overdrafts. But potentially, we need to kind of make sure that they're aware of our situation in terms of any covenants that we might be breached. We might be in breach coming forward. This after having looked at our scenarios and cash and part of the cash flow forecasting that we took care of. And then obviously after looking at all the internal things and discussing with our existing lenders, there is obviously the tendency to go for additional funding and discuss with the banks in terms of what potential there is to get support from them. Very important as one of the things that kind of we're also seeing with some of the people we're helping. It's the approach to the bank is very important. And obviously everybody has their own relationship with the different banks, but with a bank and with you tend to get in these scenarios, perhaps they're being a bit open, in that sense. We need to be very careful, and this kind of links into what I mentioned before, the short term and the long term. You can plan for the short term. We need to see our cash flow forecast in the short term, but always remember that after this period, there's a long term to it. I mean, I obviously hopefully, and that it's not too long till the short term is over, but it's very easy to rationally in the firefighting process go to your bank and we've had situations where they provide extended credit or an additional loan and you might hastily accept. But the reality is that if you do that before having looked at and tried to optimize your working capital, optimize your debtors and creditors, and trying to delay payments and receive and trace receipts, you might have been able to do without that extended help, which then would live with you for beyond this term. In the longer term, you're going to have your additional interest payments to make. So any decisions that you're making now, and anything you're accepting now might come back to haunt you later. So you have to be very careful to accept them in haste. Typically, I mean, what an approach that one can use is that you can have the discussions, because you need to have the discussions for any short-term requirements you need, but keep them in the short term. So even if they're going to extend some temporary relief of some sort, do not commit to it initially. Tell the bank that you go back and assess and analyze, like we've been saying. You might not have reached the point of looking properly at your forecasts. That you're going to do that, and then go back for the firmed up fund, new restructuring your funding, and that would be key for any business. At the end of the day, that's the long-term sustainability is where we need to be looking at as well. One of the last point I mentioned there is something that Angelique kind of touched on as well earlier, in terms of looking at and assessing your business as such. I mean, it's not typically the time where one perhaps might imagine that they'll be perhaps exiting or disposing of any part of their business. But together with this kind of goes hand in hand with looking at your business plan and strategy again and rejigging that. There might be potential. There might be people that have the cash and they might want to invest at this point. Obviously, there's always going to be. It's not a typical time for one would imagine for transactions, but there will be possible transactions, and it's something to keep in mind when you're approaching this topic. I mean, basically, that's in general what I had to highlight. I think the most important thing to keep in mind, if I had to pick something, is any decisions you're taking now for the short term, you know, kind of being sure about it and being comfortable. I mean, reaching out to obviously internally and if needs be even to any of your advisors to us, you know, to ensure this long-term sustainability at the end of the day. I think at this point I'm pretty much done, and we can take any questions later. In that case, passing on to Katja, who will take you through the managing your stakeholders. Thank you.
So, moving to the third and the last step, we discuss managing our internal and external stakeholders. So Angelique took us through steps to be able to take stock of our financial position, and Mark just went over a few possible action points we could be considering at this point in time, or things that we are still deliberating at this point. The third and final step is managing our internal and external stakeholders, which is an important step in today's realities, as everyone is impacted by the COVID-19, and we are currently in a situation where we need to manage all our stakeholders concurrently. In essence, throughout this webinar, we have been suggesting a few pointers based on our experience in relation to crisis management and business recovery services, which we have carried out for our clients in the past. Obviously, these were one-off isolated organizations and events which were impacted, unlike the situation where we have today, where most organizations are impacted in varying degrees, which in a way is a positive point when it comes to this third stage that we're discussing, as everyone shares the same concerns, and we are seeing stakeholders displaying a lot of understanding and empathy. In times like these, we are in fact reminded that we are essentially a business ecosystem which functions in a larger community, and we need each other to survive. We now have had the time to possibly digest the initial panic we all experienced with the COVID-19. There was initially the panic of the actual virus itself. Then we were all like scrambling to understand how we were going to work. And we had a bit of discomfort in rearranging our work and home arrangements. And now we're coming to terms with the severity possibly of these economic impacts. As a business community, we are now all with our sleeves rolled up, understanding what tangible action points we need to be taking, as Mark highlighted in the previous stage. So we are scrambling to reduce all our costs. We're delaying our projects and our investments. We're trying to obtain more liquidity. We're stretching our credit arrangements. We're understanding if we have any opportunity to boost sales and how to reinvent ourselves, and in some cases remaining partly operational, if at all. What is key during these extraordinary times is to, in my opinion, go back to basics, to ensure that there is a structured decision-making process and a structured communication procedures. So before we speak about managing stakeholders, we need to acknowledge that it is a time for critical decisions. Effective boards will need to resist the impulse to micromanage at this point. It's important to ensure that there are clear guidelines on what types of decisions need to be made by the board, by the CEO, and by management. We also need to ensure we have the structure and setup in place to be able to take a large number of operational decisions in a very short period of time, as many of you have already been doing. So we suggest possibly a more structured approach to decision making and more discussion to validate decisions with management teams and the board of directors. Getting different viewpoints is vital, not to take decisions just from a CFO or a CEO point of view, as not to miss on implications on operations and to avoid having to backtrack or half-baked decisions which are being communicated to your staff or to the public. We all have needed to become more agile, more flexible, and learn how to delegate more within this period. We also need to ensure that our directors have all the information required to understand the full range of risks to employees, the organization, and the overall business as the crisis pans out. And we need to understand the level of risk over the different potential timeframes the COVID-19 will span over. While operational and financial decisions are being taken, we need to keep in mind as well our corporate image and keep this front of mind. How we act or how we opt not to act during these times will surely impact our corporate image, our brand value, and our relations with stakeholders, which we have nurtured and built over the years. In times like these, We also need good structured communication, which possibly we did not put so much emphasis on in the past. Good communication, having decided on the processes, the systems and the structure to follow when it comes to internal and external communication. Starting with internal communication, we need to start communicating regularly, more regularly internally with our staff, with clear messages. Staff all have fears and would want to be aware of the decisions which are currently being taken by management. So it is crucial to communicate readily and clearly. At the same time, we don't just want to communicate decisions to our teams. We want to try speak regularly to our people. We have clients who we're seeing who are like organizing email blogs, holding, virtual meetings, some just using WhatsApp groups. Whatever keeps communication channels open at the moment. People want to hear from the top, people want to hear from management. But at the same time, we also need to have this open channel to listen to the feedback from our operational people, the men and women on the ground, as possibly they could be privy to possible tangible insight, which we would have not considered at this point in time. When it comes to internal communication plans, we obviously need to keep in mind we are speaking to our people, and people have different levels of understanding or ability to think through what is happening, and different ways of responding to such a crisis, either rationally, emotionally, calm, anxious. Personally, I've gone through a few of these over the last few weeks. But when it comes and then to managing external stakeholders and external communication plans, as well, we are suggesting that the system is structured. We need to keep in mind we are challenged. We are all challenged and stressed in the scenario, and we are most likely have instances where the different interests of your different stakeholders are conflicting, and there will also be significant demands for real-time information. So depending on the action points we were discussing with Mark in the second phase, you immediately need to understand who is impacted, who you need to speak to, which operational stakeholders are impacted, prioritizing who to reach out to, be clear on what you are requesting or suggesting or negotiating from your clients, suppliers, your insurers, your landlords. Even here, opt for a structured approach to be able to delegate, where before you as CFO or CEO used to take on a lot of the negotiations. If you have a lot, and knowing how time sensitive matters are, delegate tasks and relationships and have a plan to regroup at the end of the day, and do not try to take on too much yourself, as it is a time to listen and a time to strengthen relationships. As we were saying, there is no one size fits all. So different companies have different external audiences with different priorities. Nevertheless, developing trust with these audiences will be central to the sustainability of the organization through the crisis and eventually beyond. We do suggest considering using scenario analysis, business modeling, supply chain and value chain models to help pressure test your understanding and articulation of how the organization can help customers and suppliers, and at the appropriate time, keep investors informed about how you are managing risks. Just as a last point, I know that we already have been mentioning this, but when it comes to approaching banks, we need to be careful, we need to go prepared with projections to articulate our funding request. But we also need to keep in mind, we do not know for how long this is going to pan out. So we have to be prepared with different scenarios to be able to better negotiate with our banks to understand how they can assist us. We need to have arrangements in place to withdraw possibly tranches depending on the scenario that pans out, and we need to also be able to take on the debt we are proposing in the long term to ensure our sustainability. Obviously, another key stakeholder in all this is the government. So there were various discussions with the business community in order to release the measures, and we are aware that potentially there could be more measures which are issued as well, always depending on the time span this will pan out. For the time being, we're not privy to any further developments, but we wanted to remind you of the SME Consultancy Service Grant Scheme managed by the Measures and Support Division within the Ministry for European Affairs and Equality now. And the grant scheme was designed to facilitate SMEs in engaging and covering part of the cost of external consultancy services, and eligible SMEs with approved application will be given a lump sum grant of €4,000 when they engaged a registered external service provider to assist them in developing a business recovery plan, which is obviously linked to today's webinar topic. The grant provides for other services such as feasibility studies, organization and operation reviews, business plans, and the like, but we can safely assume that obviously business recovery plans will be in demand at this point in time. As PwC, we are registered providers under this scheme, and in order to obtain such a grant, you would need to apply by filling in an online application through the Business Enhanced website. And following the evaluation by the Measures and Support Division, you will receive an approval for the grant. We have been in contact with the Measures and Support Division within the ministry and have confirmed that applications now will be sped up and process reviewed every 2 weeks instead of the 6 to 8 week period which they currently operate on. So once you apply, you will have a response as to whether you are eligible for the grant within a 2-week time frame. And on the slide, we have the cutoff dates to apply. Also on the call, we have Daniela Burlo, who regularly deals with the authority and assists clients throughout this process for applying for funds and schemes. So you can drop us a question either in the chat box, or you can also drop us an email should you have any questions regarding eligibility or any other areas. For the time being as well, more details can be found on the Business Enhanced website, and we will also be circulating a communication to our client soon. Once obviously the application is approved, work with your selected service provider can commence. With that last point, I'm going to pass you on to Ruth, who as always will provide us an insightful point of view as a lawyer on directors' duties and obligations.
Okay. So we've seen the arguments from a financial side. Let's not forget that there are still obligations and duties at law, and they are still evident, and more so they become more important in these current scenarios. I will start off from the same starting point that Angelique started. We need to take a snapshot that the pandemic had on the company in its financial affairs. If the company has been relatively unaffected, all well and good, there are still precautions that the board of directors still need to take, and the board still needs to be cautious, and we'll get to those later. If the company, however, is currently in financial difficulty, there are provisions at law that can come into play, and it's very important for the directors to bear these into consideration. We can move in to the next slide. So, if a company goes into financial difficulty, the director's obligation shifts. It's no longer aimed towards the company, which is understood to be in normal circumstances the shareholders, but the duties are then geared towards the creditors, because potentially the company might be insolvent and therefore unable to pay its debts. One of the main provisions that directors need to bear into their consideration is the provision relating to wrongful trading, which basically provides that the directors may be personally liable towards the debts of the company if a company goes into insolvency, and that sometime before it actually starts the dissolution process, the directors knew or ought to have known that there was no reasonable prospect that the company could have been avoided to go into dissolution because of insolvency, and the directors failed to take every step which ought to have taken from a reasonable perspective in order to minimize the potential loss of the creditors. Wrongful trading, unlike fraudulent trading, it is not a criminal action. So with regards to fraudulent trading, where obviously the onus of proof needs to be much higher because it's a criminal action and prosecution must actually bring forward the evidence, wrongful trading is a civil action. So the onus of proof is on the directors to actually prove that they actually took all the steps necessary in order to minimize this potential loss. And the test which they are subjected to would be a subjective and objective test, in the sense that what would a reasonable person
with the knowledge that that person had and the knowledge that that person should have had, would have decided if he was in the board, in obviously surrounding the circumstances that we are. We can go to the next step. One thing that should also be mentioned with regards to wrongful trading, I mean, these are, they are quite onerous provisions, and some cases, some states are actually exploring whether they actually will introduce some sort of a moratorium on these provisions. The whole idea is that not to try to siphon the economy more by actually, because it's obvious that directors might be worried to even make standard payments even to their suppliers and sometimes even to their employees because of provisions such as the wrongful trading. It's good to actually keep an eye to see whether Malta will actually adopt any of these measures. In any case, as mentioned before, so whether the company is currently in financial difficulty or not, there are still some practical points that the directors need to bear in mind in these difficult times. Let's not assume that the safest course is to stop trading. Directors need to carefully consider whether the business is viable. It's important that these are discussed at board level, and it's also important maybe for directors to insist on more frequent board meetings. It's paramount, I think, in this scenario because the situation is fluid. It changes from one day to another. Directors should make sure that there is proper distribution of responsibility within the company. Also, it's good to mention that at law there is no distinction between executive and non-executive directors. They must ensure that the accounts are being properly kept and up to date, and that the board receives an updated budget and the full picture of the company's financial and cash flow position, because that might determine obviously their decisions. It might be in certain circumstances that it's actually appropriate to get outside and professional advice. And it might also be advisable to keep major creditors regularly informed. This might actually play quite a bit if the company might file for a restructuring procedure. The idea is that basically the company must be fully in picture of the company's situation, and the directors must ensure that all the recommendations that they are making at the board meetings and all dissents from any unwise actions or inactivity are properly minuted and fully recorded. Remember that the onus of proof is on the directors, and these are the evidence that directors would need to bring forward if there is a claim of wrongful trading. If a director is in a minority and if his recommendations are repeatedly being rejected, then he might consider resigning. Remember, however, that this should be the last resort. Resigning might not necessarily exonerate a director from liability. If a company is unable or imminently likely to become unable to pay its debt, and this is obviously the directors that should be aware of such a situation, then the law obliges the directors to actually call an extraordinary meeting, and it must be called within 30 days. The general meeting will then decide what to do, whether to actually put the company into dissolution or to put it under a restructuring procedure. We can move to the second. Thank you. Another provision that is important to actually bear in mind is the one on fraudulent preference. It affects both the debtor company as well as the creditor company. Because if a company goes into insolvency, then all the transactions it entered into 6 months before the dissolution of the company, be it any payment, any execution of any contract, any disposition and any obligation it entered into, it will be scrutinized. If they are seen that they were made either gratuitously or at an undervalue, so basically less than the actual value of that thing's worth, or in preference, so that basically they, for instance, pay the creditor over another creditor, then those assets will be clawed back as assets of the company. And even the person who would be deemed to be preferred will be personally liable as a surety for the debt of the insolvent company. So obviously here it's quite a and to an extent such a liability. We can move, thank you. Just a few other things to mention. Distributions, it could be that the company is still in a good financial positions, and there may be were considerations to make a distribution of dividends. It might be prudent to hold these off. If there were distributions already declared, it might be prudent to postpone the payments. I mean, let's consider that the situation is still fluid and we don't know when it's going to actually change. It might be more common in these scenarios that you'd be privy to certain sensitive data and information. Let's remember the obligation and the offense of insider dealing. There are also provisions in terms of the civil code which relate to fiduciary obligations when you receive confidential information. And last but not least, a number of companies are working remotely. They might need to take certain data home. This is outside, obviously, their normal sphere of activity. There are more risks that there might be a leak of sensitive data. Let's not forget the obligations that there are, and obviously the extent and the severe liabilities if there is a leak of any confidential and private data. That's it mainly from my end. Ryan?
All right. Thank you, Ruth, and thank you to all the other presenters. We've got roughly 20 minutes left in the time allocated. And as we said in the beginning, we allocated this time to any questions that you might have. So feel free to obviously using the comment box to make it easy to make it easier to put any questions that you might wish to pose to any of our speakers. I'll moderate and either answer the questions myself or else pass on to one of the speakers. That is, if you have if you have any questions that you feel comfortable discussing in this context. Okay. So it's seems like that no questions are coming in, which probably, hopefully, it means that our presentation was clear and to the point.
There's one, right? There's one question.
One question. Okay. Mario, this is for you, Ruth. That here, Mario's asking that at a point the company might be facing insolvency could refer to a restructuring procedure. Is this a legal point or a commercial point?
Yes, there is a provision in terms of our Companies Act which actually allows for companies that are facing insolvency to actually enter into a restructuring procedure. This is done under the guidance of our law courts. Obviously, if there is agreement with the creditors, and so as long as the company is not technically insolvent, you can go under a restructuring procedure, even maybe before, with some sort of agreement with the creditors. But the restructuring procedure I specifically mentioned are the ones that are basically directed by our courts.
Okay, I hope that addresses your question, Mario. All right. So unless there are more questions, I think we can bring the session to an end. You have on screen at the moment, you have our email addresses. Feel free to reach out to us if you would like to discuss anything in relation to this topic or any other way in which we can be of assistance to you. We will be distributing the slides to all the participants. And as you might have noticed, the webinar has been recorded, so we'll also be sending you a link to the recorded events. Thank you for joining. I hope you found this useful, and we look forward to having you on the future webinars that we will be organizing in the coming weeks. Thank you.